Dear class, once again, let us today discuss bank reconciliation. We mean make into agreement the transaction in a cash book and a transaction on a bank statement. Reconciliation means make into agreement. Since we know that their cash is susceptible for changes for theft, fraud, and loss, it is important to continuously verify that the amount shown in the ledger balance is what the business actually has. In a bank, the transaction we make on a cash book in the debit side should also appear on a bank statement on the credit side. The also transaction reflected in the cash book on the credit side should also be reflected in a bank statement on the debit side. So a bank reconciliation compare the company record of a cash on hand to the bank statement, adjust for a missing or incorrect entries, or complete them when the result equal the ending balance of the bank statement. So reconciliation ends when the balance on the bank statement and the balance on cash book equal. So bank reconciliation should be completed at least once a month, but sometimes it might be done frequently using online statement that provided up-to-date information. So the reason for the difference in the banking and the cash book balances, one reason is a time lag. The time between writing a check and the payment that appearing on the bank statement. So this we call them unpresented check. But the time lag between deposit amount, we make a deposit into the bank account and it takes time for some time before they are appearing in our bank statement. So this we refer them as uncredited check. So again, we have a direct debit or standing orders. So this also might be done in a cash book or might be done on a bank statement without the two information be done at one time. But again, there is a bank charges. When bank do make some charges on providing a service, they might be recorded on one side, maybe in a bank, and they are not appear on a cash book. But some error may be due to the difference may be because of some error or omission in either of the two, either cash book or the banks. So we call unpresented check. These are the company make issued checks that have not yet been presented for the bank for payment. So you find out that these checks have been deducted from the cash book. So they are being credited in the cash book, but they never appear on a bank statement, that they do not being debited in a bank statement. So if you consider the balance at the bank will be higher as compared to the cash book. Again, we have uncredited check. So these are deposit check but remain not credited in the bank statement. We call them uncredited check. You make deposit into the bank, you updated your cash book, that you add some amount in your bank balance, but the bank is not yet credited it in the bank statement. But again, we have a deposit in transit. The company record receive cash and then send the cash to the bank. So until those cash enter, it might be they are not recorded with the bank. maybe until some time. So again, we have an interest on deposits. Make a deposit, bank provide interest, but this interest you are not captured on time with the cash book. But the bank service fee also causes the difference. The bank charge for the bank make charge for a variety of services, and they remove the related cash from the company account. So sometimes the company is not aware of this charge until the bank statement arrives, and it might take some time before you collect the bank statement. So this make the difference between a bank statement and a cash book. Then we have a check printing charge. So these are one of the bank charge, printing charge. So the charge, the bank charge the company to print additional checkbook for it. They deduct that amount from the company account. So the company is not aware of the amount of this charge until the bank statement arrives. So this will also make a difference between a bank statement and a cash book. It might happen you have a bank error, the incorrect amount recorded in transaction. The bank must be notified to correct that error. It might be a company error. The company has incorrectly recorded a cash-related transaction, which is not reflected in bank. So let us take one example to give you a clear picture on how the bank reconciliation, the question on the bank reconciliation are treated. For instance, we have illustration number 1. On 31st December 2022, the bank column of John cash book showed a debit balance of 1,300 in the cash book, but the monthly bank statement of the same account taken on the same date, December 31st, 2022, showed a credit balance of 2,950. So remember that these this cash book, that is the bank column, should resemble the bank statement, but here we see that there is a difference. So on checking the cash book with the bank statement, it was discovered that the following transaction had not been entered in the cash book. 1, there were a dividend of 240 had been paid directly to the bank. So it means that the bank has high amount as compared to cash book. A credit transfer custom exercise VAT refund of 260 had been collected by bank, but this amount has been not yet recorded in the cash book. So again, what makes also the difference is the bank had charged his account by 30 as a service charge. This service charge has been rectified on the cash book. But again, number 4, a direct debit of 70 for the last subscription had been paid by the bank. So there is a direct debit of 70 that has never been entered in the cash book. Again, number 5 is a standing order of Tanzania shillings 200 for John's loan repayment had been paid by the bank, but this transaction has never been reflected into cash book. So it's the one who make the difference exist. So number 6 is a John deposit account balance of 1,400 was transferred into his bank current account. So we have a John deposit account which were transferred into bank current account, and this has been not notified by it's not captured by the cash book. So a further check revealed the following item.
The opening balance of the cash book was carried down as 300. So the cash book is erroneously carried down as 300 instead of 500, which is the correct amount. So the correct amount, we are supposed to be the opening balance. We are supposed to be 500, and it was carried down wrongly as 300. So this also is what our one item which make the difference exist. So the two check drawn in favor of Zikwe and Neema had been entered in the cash book but had not been presented for payment. So you see that we have a two check drawn in favor of Zikwe and Neema. These amounts have been deducted from the cash book but is not yet presented for payment. Again, number Roman 3 is a cash and the check amounting to 690 had been paid into the bank on 31st December, but were not credited by the bank until the 2nd January. So the deposit in the cash book were recorded on 31st December, but due to one reason or another, this amount were not credited until the next year. Month. So required starting with the debit balance of 1,300. Bring the cash book column up to date and then balance the cash book. Number 2, prepare bank reconciliation as at 31st December 2020. So the bank reconciliation as 31st December, a balance as per adjusted cash book 3,100, add and presented check with equal and will become 240, and then credit dedication the checkbook 90, and the balance as per bank statement now become 2,060.50. And that makes the end of our presentation.